I'm in Washington, D.C. this week at the headquarters of the International Monetary Fund, where the IMF World Bank spring meetings are convening this week. It is a bustling week for finance ministers, for central bank governors, for civil society leaders, and other leaders of the multilateral financial institution, including the African Development Bank. With the war in Ukraine, the uncertainty from the geopolitical crisis in the war in Ukraine and the Middle East going on, there couldn't be more of a better time for the IMF flagship report to be released this week, including the World Economic Outlook, the Global Financial Stability Report, and the Regional Economic Outlook for the various regions, including Africa. I sat down with Cathy Patillo, the Deputy Director of the African Department at the IMF. I wanted to zoom out to talk about the regional economic outlook for the African continent, to get a sense of the fund's recommendation for the continent, as well as lessons learned over the last 2 decades, and how the continent can turn the tide on some of the pressing challenges that is currently facing, including from the climate impact, as well as food insecurity and the high debt distress. I'm going to start, if you can just give us an overview. I know there will be a report next week, so give us sort of an overview and the highlights from that report. What should we expect regarding the region, the African continent?
Thank you so much. So pleasure to talk to you. We will be releasing next week our Sub-Saharan Africa Regional Economic Outlook. The message is that after 4 very, very turbulent years, Sub-Saharan Africa is on the mend, although the recovery is tepid and very pricey. So the good news is that growth is increasing from 3.4% last year to 3.8% in 2024. It's pretty broad-based. 2/3 of economies in the region are expected to see growth increases. We term it tepid, though, because the growth recovery is relatively modest, and that level is still, there's a gap between what we were expecting pre-pandemic. And there's also quite a gap then between what would be needed for growth to get back to the convergence path with the rest of emerging market and developing economies to increase real per capita income. So that's the tepid part. The pricey part is that the funding squeeze that we've highlighted previously still continues. That is, financing is extremely difficult and costly. So countries are seeing this year still financing shortfalls, high rollover risks, a large number of debt repayments. In fact, the level of net external flows to the public sector, that's net of the outflows for debt repayments and redemptions and the inflows, that is at the lowest level since the global financial crisis. So financing is quite difficult. Now again, the good news is that countries, a couple of countries have returned to international capital markets. We had the issuance by Benin, Cote d'Ivoire, Kenya, after a 2-year hiatus of all frontier markets from Sub-Saharan Africa being shut out of international capital markets. So that's great. Even for them, that was pricey in that the yields for those Eurobonds are much higher now than they were pre-pandemic. So this, priciness then has impacts for the region overall with these very high borrowing costs. It means that, debt service payments or interest payments to revenue are still very, very high, and that crowds out the needed space for spending on development that again is needed for that growth going forward. So the recovery, sub-Saharan Africa on the mend, but tepid and pricey. Another message though is that macro policies are generally in the right direction, and that's starting to pay off. Inflation is coming down, around 6% median now from 10% a year ago. So that's great. Countries have been taking those actions. Fiscal policy is also really stabilizing, and that's paying off then in debt levels stabilizing. After 10 years of continual increase, public debt in the region is now stabilizing around 60% of GDP. So policies generally in the right direction. Even in the face of all this effort, though, the region still continues to face incredible shocks. So you see right now the drought in Southern Africa, unprecedented levels of rainfall, lower than the past 4 decades. That's going to have really hard impacts for food security, for food prices, for pressure on public finances, external payments in that region. And it's a year too with continued uncertainties. There's the uncertainties, of course, of geoeconomic fragmentation and what's happened, in West Africa with the withdrawal of 3 countries from ECOWAS.
Yeah.
And also then you have, a record number of elections on the continent this year, 18 we count. That's great. That's part of the democratic process. In election years, though, there can be pressures sometimes, that make it harder for policy adjustment and, tend to increase deficits. So policymakers have to be on the lookout. So in the face of all this, of course, international solidarity is key. That's a message of our report. And the IMF is there, has been there, and will continue to be there for countries in the region.
Okay, so there is good news, and then there is not so good news. So I want to ask you, I know you and I and most of our audience understand what Eurobond is. But for the average African, they are wondering why are they doing this? Why do we need Eurobond? Why? So could you explain to those audience, why do the leaders, why do their country need to take on some of these Eurobond debts?
So countries need financing for all their development goals. They need this funding for education, health, ports and roads, etc. So where do you get funding? A lot of countries in Africa had been benefiting for many years from a lot of funding from aid, or from bilateral partners, or from multilateral partners, or from new partners like China. But in the past years, those sources of financing, which were very concessional, which were low interest rate, very long repayment, a lot of that has gone way, way down.
That goes back to the funding squeeze.
Exactly, right, yeah. And so in the face of that, then countries also look to diversify their funding sources and borrowed more commercially, with foreign banks, etc. but also in international capital markets where you can issue bonds, foreign currency bonds, and get this kind of financing. So it opens up additional financing opportunities, which is good. But the challenge is, it's costly, and the international capital markets then also can be what we term pro-cyclical. So they're there in the good times, but then sometimes the financing dries up at the time when you need it most.
Yeah.
Right. So I think that's another reason why a place like the IMF is there for countries that need financing during difficult times. And so we've been an important part of that global financial safety net, and also highlights then, the importance of more stable, long-term sources of financing like FDI, or of course domestic resource mobilization, the tax base.
Yeah, I was about to ask you that because there has been a lot of talk from the IMF regarding increasing the revenue mobilization through taxes, and that's something that's been very hard to do across the continent, which is part of the reason why I asked you about to explain to the average African about the Eurobond. Like, okay, why do leaders country need to go out and borrow this money and get this financing? Because people are talking about inflation, the prices are too high, and tariff. So we have good news and also good news. Mm-hmm. When you look back to a decade, mm-hmm. There was a period of Africa rising, mm-hmm. and then we have the period of Africa not rising. And now, given the pandemic and the geopolitical issue that are going on, what are some of the lessons that you've learned that the difference between now and then that can be applied, that can improve, that leaders, finance ministers and other leaders can learn from?
Yes, yeah. So this is a great question. So I would highlight a couple important lessons looking back, as you say. First, I think we're seeing that countries that are more diversified, that their source of economic activity is broad-based, have done much better than those that are very resource-intensive, including oil. Right? Yeah. So we have a big divergence in the growth path of these more diversified economies and the resource-intensive, where the more diversified ones are, growing now at around 6%. The resource-intensive ones, half that, which means in those countries, real per capita growth is barely nothing.
Like countries like
Nigeria, right? Yeah. Yes. So I think one important lesson is the importance of working toward diversification, because that, in the face of shocks, like the commodity price shock that was in the mid 2014, 2015, where commodity prices had been very high and mm-hmm. then came down. More diversified economies do better in the face of shocks and volatility. They also, given they have more sectors, they can generate more jobs, which improves the quality of life and people's well-being, and helps with the cost of living and stability also. So the first lesson, I think, is Diversification, yeah. I think the second lesson is that policymakers really need to be nimble and agile. And we saw that during the pandemic, that when shocks hit, making steps to address them quickly is super important. And we saw all the ingenuity, during the pandemic of what leaders in sub-Saharan Africa were able to do with special support for populations, with, using new digital programs to deliver, support, with figuring out how to, help businesses that were hurting. So just as important as the support when there is a shock and being agile there, knowing when to pull it back, I think is equally as important. And so you see that with, inflation also, countries hit by big inflation, they have to adjust, they have to move their monetary policy, and then if inflation is falling, they need to adjust the other way. So I'd say that's a second lesson. A third lesson is the importance of building buffers before things happen. So we talked about being agile and responding, but even better than responding is being prepared, right? And countries that, have lower debt, have higher reserves, have lower inflation, they were much better prepared to deal with these shocks than countries without. So, get your house in good order, build those buffers, and that will pay off.
After, building those buffers and talking with some of the ministers in the past is like, how can we build buffers when we are being squeezed, when we don't have the financing? We are dealing with the climate crisis, as you said, the drought, and all of these crises. Like the house is falling, and you're like, build a buffer. Like, yeah. So I looking at it, how can they do it? I know you mentioned during the pandemic, like sometimes in crisis, you come up with the greatest idea with ingenuity.
Yeah.
So what are some that you saw during those periods that they can expand and use in building buffers that you've been talking about?
But I mean, just on the macro side, I hear you, it is super difficult, but we are seeing some of that already, right? I said that debt is stabilizing. So, countries are trying to make sure that, debt is not too high.
Right.
Yeah, inflation is coming down. That's a great buffer again. Foreign exchange reserves are there in many countries, and you're seeing the challenge though of countries, with not enough exchange rate flexibility. They haven't allowed the exchange rate to adjust enough, and so they're not able then to build enough reserves. But we are seeing that also. So you are seeing, some progress toward rebuilding these buffers. So answering your question, and also the next lesson I was going to note was supporting poor and vulnerable populations, right? Yeah. And that, I think, is where we did see, a lot of ingenuity, countries looking to, if they didn't have really good social programs, still looking to, use other means to identify, who was the poor, to get out cash transfers or food programs, to use, digital means, to use
ID. That was one of the things that even now in Nigeria, as well as other countries, that they're now implementing on the digital ID system, so the services can be provided seamlessly. So,
Exactly,
yeah.
exactly, yeah. And some countries that, Togo, I think, used a lot of digitalization and also, different roles that you would find for people, enrolling in voter registration or other places just to be able to identify people. So, see to the best of your ability, how you can make sure though the resources go to those people, because sometimes you have programs that are meant to help the poor, but really a lot of non-poor people benefit, or you have things like energy subsidies, which can use so much resources, and people might say this is important for the poor, but in fact the majority of the benefits go to the rich,
Yeah.
who have the
Who have
cars.
their resources.
Exactly, exactly. So, that I think again is a key lesson, and we've seen a number of countries with a lot of political instability, a lot of coups, etc. Really deep-seated causes, but rural people in the more vulnerable who don't feel like the government has really delivered for them. That's when you get a lot of instability and lack of feeling that this is a government
that works for me.
Exactly,
Yeah.
exactly. Yeah, and the final lesson is just, again, international support, right? That I think we've seen over the past decade, particularly since the pandemic, that countries, particularly in Africa, can't do this alone. It's a global imperative to ensure the development, particularly of low-income countries, because it's good for them and it's good for the whole world.
The whole world. I do not ask you, I know you've said, can you talk about some of the bright spots, countries on the continent? Oftentimes focus on the bigger countries like
Mhm.
South Africa, Nigeria, Angola. We all know about Kenya. But as you said, Ivory Coast,
Mhm.
Benin, there are some bright spots in those areas. So could you
Yeah,
give us some?
I mean, we were talking before about diversified economies. So I think, as you were highlighting, places like Cote d'Ivoire, Benin, even Rwanda, the Gambia, in terms of growth now, these are more diversified economies that are doing quite well. We are going to see quite strong growth in Niger and Senegal this year because of the coming on stream of oil and gas projects in those countries. Fragile and conflict affected states, there are real difficulties in some of those countries, CAR, Equatorial Guinea, etc. But I think one of the important points again is to think about this diversification of your economy, your sources of growth in a world that's going to continue to have a lot of shocks and financing difficulties.
So to wrap this up, some education, youth, we have high unemployment on the continent, and I know leaders are working towards that. We have a new leader in Senegal. Like everyone was worried about that, and is a young leader, so there's optimism among people that things. I mean, Senegal has always been a model for democracy And as you mentioned earlier on, like the economic also is doing great. And then we have the Southern Africa, where we have droughts like Malawi, Zambia, Zimbabwe. If I know the IMF might not want to, but I'm kind of putting you on the spot here. If investors, you talk about getting help from the international community. If I'm an investor looking at the continent, what sectors and what area should I be looking at? As well as ministers and leaders. You talk about that diversification. What sectors should they pay closer attention to attract this financing that they need to boost our revenue?
Okay, yeah. So what I highlight from your question is really the optimism that I have for the potential and the opportunities in the continent for investors, both international and domestic, because of all the continent, has to offer in terms of this very young, dynamic, growing population with a lot of entrepreneurship and savvy in some of the new areas in the world, technology, entertainment, yeah. So that's a huge resource. The resource of the resources for the green transition, right? You have these critical minerals which the world needs for the green energy transition. We have a note on that coming in our Rio. And the young dynamic population, the key, of course, is building education and skills and those jobs. We also have a note in the Rio on the education challenges. So, the types of sectors are going to depend, on the individual countries. But there is so much opportunity, I think, for private sector-led growth. The government has a really important role in building infrastructure and providing social services, but we need more in the private sector, both domestically and externally. And from manufacturing, services, tourism, tech, entertainment, the value added from these minerals, there is tremendous potential in so many countries in the region.
Okay, what are you looking forward to next week?
Yeah,
it's a busy week.
It's a busy week, yeah. So we've made so much progress, I think, on the low-income country issues here with the improvement of our resources for lending to low-income countries, with our third chair, African chair to the board, and globally, with our approval of the quota increase that'll help strengthen, continue to strengthen the IMF. So I'm looking forward to great discussions with African policymakers on where we are and the challenges ahead that we've just discussed, as well as their ability to make sure their voice continues to be really loudly heard in the global discussions here.
Okay. Thank you so much for your time, and we look forward to seeing you at the spring meeting.
Thank you so much.